We're back. September 15th. Another weekly update on Pure Perspectives. I'm here with Gary. Gary, how you doing?
Awesome. Great to be back.
Got some news, got some stuff, got some activity, got some activity happening.
Rate
Tell us
cuts.
what's going on. Tell us what's happening.
Well, after y'all get done smashing that like button, we're going to talk about the Fed. We're going to talk about some economic conditions that are putting downward pressure on mortgage rates. So let's get into it. So today, we've seen over the last week or so some positive movement downward in mortgage rates. A lot of that has to do with inflation and some of the economic factors, i.e. jobs, driving that down. So we're baking that in. The mortgage side, we bake that in Fed rate cut. So we're seeing roughly the 25 basis point cut is what it looks like it's going to be on Wednesday. We've seen about that much in rates on the mortgage side. So you're looking in the low sixes for a conventional mortgage today with good credit. You're probably in the low fives on a FHA VA loan. So those are great things, getting more affordability. Obviously, that comes with a little bit of a caveat because there is some softening in the jobs market that is not ideal, but these are the factors that drive our rates, right?
Yep.
So then tomorrow we'll get a reading on retail sales. That'll kind of give us more idea of how the economy is performing. And then the big day is Wednesday. Fed meets, and there is a greater than 90%, I think it's 97% chance of a Fed rate cut, 96.4 to be exact. I've got it.
I'll
right
take
here.
that
That's
number.
why I know. Yeah, so that's going to do a lot. I think there's been a lot of pressure. I think the normal, just everyday Americans struggling. So this will be one step closer to help bring in some relief. Obviously, things still cost a lot. That number, the cost of goods really isn't coming down.
No.
It's just the rate in which they're increasing is not going up as rapidly. That's the best way to look at inflation. But it looks like October's meeting is another 75% chance of a 25 basis point cut, and then December is 70%.
Okay.
So likely, there is talks of a 50 basis point cut at some point, but it's not baked into the market. Oh, 25 this week.
Got it.
Yeah, we're looking at 25 this week. I think if 50 comes in, that means we've had some pretty rough employment, and inflation could come down, which is great. Rates go with inflation. As inflation comes down, so do our rates. So those are the good things. The bad side is when our rates come down with negative or bad performing economic data.
Yes.
Trust me, we're not sitting over here cheering for the economy to crash so we can get better mortgage rates. That doesn't do anybody any good.
Nope.
What we want to see is some good readings on inflation that really put the pressure down on those rates. And that's kind of the hopes. And we're starting to, inflation's sticky. But I think the Fed, and they'll talk about it more tomorrow or Wednesday, is the crack in the armor, so to speak, on jobs and employment. So we will TBD on Wednesday. Yeah,
we will see. And a reminder that as Gary mentioned, that we're not waiting for the Fed rate cut in order to see these reductions. I think you had a good example last week is, the market reacts to Apple stock with the announcement of a new product that's coming in 6 months. It's the same sort of thing here. Lenders are competitive too. We're a broker. They compete. They want to have the cheap, for lack of a better, the cheapest salt and the best, most aggressive products out there. So if you're on the sidelines, don't think that you're just waiting for this switch to go from the Fed. They react. They're trying to factor in market conditions and where things are going. There'll be some reaction in the market based on what's said, but you can assume that they have a pretty good read of what's going to happen, and it's already baked into pricing. So priced a couple things this morning, certainly, very much easier to look at than 2 months ago. So we're heading in the right direction.
Yeah, it's kind of interesting to think, a month or two ago, we weren't thinking about fives.
No.
But now you can, if you so wished and the math made sense, you can be in the fives on a loan. You might have to pay a point, 3/4 of a point. Nothing extravagant, but 599's on the rate card again, and maybe even lower. I typically don't think buying points in this environment's the best way to spend your money, but
no,
some people are
I would say just a reminder that if you are thinking about refinancing, get ahead of it. Get
Mm-hmm.
your mortgage plan in
Mm-hmm.
place. Let's talk. Let's get documentation
Mm-hmm.
in so that we can strike the rate that makes the most sense for your scenario. So the sooner we have that conversation and get our, our paperwork in a row and
Yeah.
help you get lined up, the easier it is for us to take action when the
Yeah.
market allows for what you're chasing, or at least give you an idea of like, hey, this is where
Yeah.
you are today. You might see
Yep.
some reductions. They're not going to be huge swings, but we
Mm-mm.
can. It certainly helps to be prepared.
Absolutely. Get your mortgage plan.
Get your mortgage plan. All right. Well, we will hop back on if anything new happens this week. If there's any
Yeah.
shocking news that come out, we'll hop on the tail end of the week. But
Yep.
yeah, should be interesting. So be sure to check in next Monday for our weekly update. We'll have a breakdown of what went on with the Fed meeting, anything else in the news that's having an impact on rates. And again, smash that like button, kids. Get to smashing. Leave us a comment.
Let's
we
go.
always we always love to hear from you. So Gary,
Yep.
thanks as always.
Yeah.
We will see everybody next Monday. Take care. Have a great week, and we'll talk soon.
Thanks.